Well, the stock market shook off some early confusion after that jobs report from the Bureau of Labor Statistics. It came in, obviously, even below the lowest estimate of 100 economists out there in the survey. I think the data was way off, but there were a couple of points that make sense, and in the end, I think that's probably what helped the stock market look beyond this backward-looking data in the first place. So that said, the unemployment rate, the real unemployment rate, the U6 number, declined to 8.4% from 9.4% at the beginning of the year. It was 9.7% a year ago. Guys, that is absolutely huge. And then there were the increases in construction and mining jobs. That matches the strong trend also reflected in that jobs report from ADP. I continue to believe investors should have exposure. You got to be in these industrial names and these material names. I promise you a special report. I'll have it complete over the weekend. It's a Dirty Fingernails report, how to make money in it, wstreet.com. In the meantime, let me give you an investing lesson. Last night I exchanged emails with one of the viewers, and it disturbed me so much I had to share it with you tonight. The notion of knowing what stock is a buy based on the share price, and then compounding that with the idea that the lower the share price is, the greater upside the stock has, is the biggest killer for investors, particularly beginning investors. So the viewer sends me the email and it says, "Hello, I'm interested in joining your group, although I am concerned that you are only pushing large cap stocks. Your recommendation of ITW at $140 is ridiculous for the average investor." My reply: with all due respect, what's ridiculous is judging investment based on share price, not valuation and fundamentals. Large cap stocks do not have limited upside. You are itching to make every mistake in the book. I preach owning great companies using old-fashioned evaluation techniques, starting with top-line growth, pricing power, market share gains, margin expansion, positive cash flow trends, balance sheet trends, technical moves and formations, and finally, management's history of execution. Let me tell you something. You do not have to be rich, but you have to be smart and not swing blindly for the fences. So the bottom line is you, the viewer, the investor, must own great American companies. They're easy to measure and monitor, and yes, even the best companies can't have overbought stocks, and even the worst companies can't have oversold stocks, but basing an entire portfolio on a proposition of buying so-called cheap stocks is investment suicide. I like what I'm seeing, though, with the hard data overall in this economy and in this market. I love what I'm hearing from management, and I really think that this rally continues. And, yeah, of course, there could be some bumps in the road, but listen, don't make this thing a casino by only buying the highest risk names out there or only buying one stock and see how it goes. America is coming back, and this stock market is a reflection of that.